What would it look like if you were over in this other market? It would look like you were converting this to a piece of paper to then measure the world. And the piece of paper was losing value. So it would look like Bitcoin was going up. And both would be true, depending where your belief of the system was. So that's why I go through, unless somebody has to understand the problem first, right? And then, and really understand the problem. And then their mind searches for a solution. And then is Bitcoin that solution? And why I specifically said protocol is it means all of the other coins, all of the other nonsense is going to go to zero against Bitcoin.
In a true free market, reality bends depending on the lens you choose to measure it with. Standing here in 2026, many still convert everything into a weakening piece of paper and call that perspective truth. That paper steadily erodes, manufacturing the illusion that assets like Bitcoin are simply rising rather than positioning for a bull run as value migrates. Both views can feel correct at once, entirely shaped by belief systems. But clarity only comes when the root problem is understood first. Without that foundation, market moves appear random, conviction fades, and narratives replace principles. Jeff Booth addressed this tension directly in a recent interview, starting from free market fundamentals and walking toward the contradictions embedded in modern finance. He highlighted the cognitive friction of accepting deflationary forces in a world addicted to debt-fueled expansion. People sense something is broken long before they can articulate it. That unease grows as productivity accelerates, while monetary systems demand perpetual growth. Booth's framing doesn't predict tops or bottoms. It explains why bull runs emerge and why certain assets disproportionately absorb the upside. Once the flaw is clearly defined, the path narrows naturally. Credit-based systems collide with structural deflation, and the search shifts from speculation to asymmetric exposure. Is Bitcoin the logical beneficiary of a 2026 bull run? When defined not as a trade, but as a monetary protocol, the answer sharpens. Competing narratives, substitute assets, and temporary trends decay over time, while hardened protocols consolidate capital. History shows this pattern clearly, just as the internet absorbed and erased its early rivals. If this framework is already unfolding in 2026, what does it suggest about what's ahead next? Stay tuned as we bring you more insightful analysis clips from Jeff Booth. Please like this video, subscribe to the channel, and turn on post notifications for more content. Enjoy the rest of the video.
Everything that came into existence came in first by somebody's mind, a thought in your mind. And that then to take that thought and to create value, an idea out of your mind, to create value for somebody else, it's competing. Those thoughts, those ideas, those actions are competing with what was there before and we're all using. And anything that doesn't provide more value fails. Why? Because we don't use it. Right? The only things we use, and they have to provide way more value. They can't be just a tiny little bit better. They have to be like 10 times better. Something that then we instantly move our time because we gain more value. So if we are both sides of that choice, right? We are one side, we have to create more value in a free market with everybody else competing to provide value. And the other side, we only use the more value. So out of that simple understanding, how could prices go up in a free market? It's impossible because we're the actors. We are the choosers of the more value. And nobody tells us what we can and can't buy. We buy the things that or services that give us more value. We're constantly on a hunt for more value. And the entrepreneurs, with all of their ideas, are trying to solve that. So in that process, now why this is hard to see is because it's never existed. That what I just said is true for sure. Another thing that is true for sure is that the prices in that world fall to the marginal cost of production. Why? Because if you created something, the margin that you create, and then everybody moves to your thing. In a free market, all the other competitors see your thing, and they know there's margin there to do it better, faster, cheaper. And so they compete with you, trying to create more value for society, because the only way they can win is deliver more value to other people. So that it's a constant competition that is faster and faster and faster, driving prices, and the output is prices fall or value increases, right? But you couldn't just imagine somebody going the other way. I'm going to create less value for somebody, way less value, and being successful. Who would use it? Unless you were in a dictatorship where you had to use it, right? A control system, not a free market, or a regulated environment that makes you use it. But the free market still attacks those things. It just doesn't attack those things in your country, right? It attacks those things in other countries, and then it moves to that market moves to another country. So you cannot stop what I just said. Prices continue to fall. And I use this example often, but it's important. It's just a toy example. But a calculator app.
Okay.
You used to pay for a Texas Instruments calculator, all the buttons and everything else. And then when the calculator was digitized, and the digital content was free, the first calculator app on Apple on the App Store cost money, and a lot of people used it because they were saving money from the calculator they used to buy. And then every calculator got better, cheaper, faster until the calculators are free. You think it's hard to believe you ever paid for a calculator. You'd never pay for a calculator today, right? So if that process, marginal cost falling to zero from the same process, so the prices fall to the marginal cost of production. The marginal cost of production is a line of code that is zero. Then you have to ask the next question: what about the marginal cost of a line of code created by other lines of code? It would be zero too, right? So AI, all of it, will be going to zero. If it's not, in a lot of these models are already completely free, and you can use them free. You can download them at GPT for all, put them on your computer, and you can have access to the entire history of information on your computer without the internet for free.
Yeah.
And the newest, latest model costs a little bit of money until it's copied everywhere else, and everybody competes, and then it gets cheaper and cheaper and cheaper. So the process is always happens. And we can see ourselves in the process, right? It has to look like that. They should be really mad. They should drive to, and then they should ask themselves, what could I do from this system, being mad at it, that could solve the problem? Because I'm in it.
Yes.
You cannot solve a system problem from a system. And so they're inside the system, spending all of their money in that system, yelling at somebody else without turning the mirror around and looking at them, when they can just exit the system and move to Bitcoin. And so you see this cascade across society. And if they measured their lives, what their fear, they're moving into fear, they're moving into scarcity. They think it's somebody else, right? They think Joe Rogan will be over and over and over again on all of this. Tucker Carlson will be, and everybody's pointing at every different enemy. And some of this is true. But what it's really pointing at is we don't want to take agency to move ourselves out of the system. We're still in it. Absolving our agency with somebody else, it has to be somebody else's fault. A system problem can't resolve a system problem. We live in a system that its base money is lent into existence. So there's no money, and it's lent into existence with an interest rate. So you're paying for something that had no cost forever, and you live on top of that system. And then that system has to grow exponentially in debt. Why does it have to grow exponentially in debt? Because it can't allow the free market. It has to keep on rising debt. If you let the free market work, this whole system would collapse. All of the money would be gone. There would be no money. All of the banks would fail. All of the houses would fail. Everything would fail. So no one wants to let that happen. So we just make believe that this person can solve the problem, or this problem, there's this enemy inside the system, and it's all the same system. There's in what I just said there should, if you're still in that system, or if you're measuring Bitcoin in fiat dollars, I'm talking to you.
Yes.
Right? I'm talking directly to you. You are the system. There is no other enemy. It's you. And until you realize that, and move into Bitcoin and spend in Bitcoin and move your time, it is you. It's easy to, it's so hard to face that fact that it's us. That why I say we're so insanely early is when you just use those stats. If only 4% of people even have a Satoshi, right? If the majority of those people don't understand this, then the majority of those people, when the Bitcoin goes up in price in relative to the fiat, they will sell their Bitcoin back to that. The majority of those people will be scammed out of their Bitcoin by that fiat system, by leveraging it, because they're still operating in the fiat system. And by the way, it has to look like this. As great a change as a lie that we've lived in for 5,000 years, that keeps on repeating throughout society, that we are a part of, that a new truth is being imposed by a discipline, it would have to look this chaotic for the people that weren't living in the new system, right? And all of these challenges, it looks exactly as you would expect it to look like. And so when you hear the things that you hear, I have empathy. I have massive empathy from those people that are going to do that and lose their Bitcoin or go back to the fiat system and think it was somebody else, but they don't have to, right? If they investigate this and everything and move their time, they will be part of a system that is so beautiful because it's built on truth, it's built on free market, it's built on trust.
From a price perspective, this framework reshapes how Bitcoin's 2026 trajectory should be read. Rather than viewing higher price levels as excess or mania, Booth's logic reframes them as pressure releases in a distorted monetary system. When productivity rises while currency expands faster, capital is forced to seek refuge. Bitcoin doesn't need optimism to rise in that environment. It needs imbalance. Each retracement simply reflects short-term disbelief, colliding with long-term structural drift. Booth has repeatedly emphasized that markets misprice assets when they ignore deflationary reality. In 2026, that mispricing shows up clearly on the chart. Volatility compressions give way to sharp expansions, not because sentiment flips overnight, but because underlying constraints tighten. Price discovery becomes violent when liquidity meets scarcity. This is why Bitcoin historically moves in sudden legs rather than smooth curves. What looks like a speculative breakout is often a delayed repricing. If Booth's thesis holds, 2026 is less about calling a top and more about recognizing phase shifts. The market isn't overheating, it's recalibrating. In that context, resistance levels matter less than time spent consolidating above prior ranges. Bitcoin's price becomes a scoreboard for systemic stress, not hype, and the higher it pushes, the clearer the signal becomes.
So that's where I always start the natural state of the free market is deflation. Because if they say that over and over and over again, and they know it's true, a lot of people nod when you say that. And what that nodding is when you say that is their subconscious knowing something that's true that they can't put their finger on. But if that's true, and it is for sure true, then they have to compare that to another statement that's also true, that a credit-based system can't allow deflation. And so they should let both those things hold, because they're both true statements. And not more true or less true. They're both completely true, but that creates a paradox, a riddle that you have to solve in your mind. And it creates a cognitive dissonance. And the first thing that cognitive dissonance, and I'm sure that while people are listening to this, the same thing's happening to them, and they're going to have to listen to it again and again and again. First cognitive dissonance is trying to reconcile two true statements that are irreconcilable together, because a credit-based system that we live in can't allow the free market, right? And so I always start there, because unless people understand the problem, Bitcoin just looks like another coin or something else. It's just, you have to understand the problem so deeply, right? To understand that it means we've never lived in a free market, right? It means somebody else has always controlled you. You're a puppet on a string, and you're yelling at them, giving them more power. And so because it's taking yours. So I start there to understand, and then I move to what would you expect to happen if the productivity from AI and robotics was sweeping across the globe. From a free market, you would expect prices to fall, your life to get easier and easier and easier and easier, even if you did nothing, because you'd expect all of these things to happen. Is that how your life is? Is that what's happening to your life, or is something else happening? Because they now need to see which system they're in. Then I ask a different question. instead of saying Bitcoin, I say, what would an open, decentralized, secure protocol bounded by energy look like? And so open, anybody could use it.
Do most people know what
So that's
that
why,
means?
but that's why I go through every word.
Okay.
Open, any single person in this other system can go at any single time without permission. They can just move. They're in a jail cell, screaming at the captors, right? And the jail cell door is open, and they could just move. They could just walk out, spend their time in a different thing, and save all that energy. But they're staying in the perceived jail cell that they create. So open, decentralized, nobody controls it, right? It's globally decentralized. Nobody controls it. Secure, in 16 years, it has not been broken. It will not be broken. Protocol is an important word because we think instead of protocols, we think in technologies, and protocols are winner take all. So protocols come in layers, and the internet is the last protocol people would know. And it came from early TCP/IP, and 4 layers later, and I'm simplifying it a little bit, was HTTP, which was invented by Tim Berners-Lee, that then became the internet. There's only one internet. You can use it if you have a VPN, the same internet, see the same information anywhere in the world with an internet connection and a computer. You cannot stop it. You either participate on it or you don't, but it imposes a new reality. And if you think about what the internet did to all of the businesses that weren't on the internet, it imposed a new reality. The iPhone is built on top of the internet. All of the things that we didn't know we needed, we use every day, built on top of a new infrastructure. So that's what's happening in Bitcoin, layer by layer by layer. It's going to be the new internet. And it's bounded by energy. So the way the way proof of work works, and the way that, and you know this, but the way that I'll just simplify it for the audience. It's connected to energy. Maybe I'll give an analogy. You're a baker, right? And I come in one day and I want to buy all of the bread you throw out at the end of the day, and I just want a deal on it. The next day, you go, oh wow, okay, I'm going to produce 2 times as much bread, hoping I show up. I show up, I buy it all. Next day, you produce 4 times as much bread. I show up, I buy it all. Next day, you produce 8 times as much. I show up, I buy it all. Next day, you go, wow, this is a good gig. I'm going to buy more ovens. I'm going to hire more people. I'm going to produce 10,000 times more bread. I show up, I buy it all. What do we just do by having an always-on buyer of bread at the margin? We created abundant bread in the free market. That's what Bitcoin is. It will always pay you for your lowest cost energy, and it decentralizes energy around the world. It pays for the energy infrastructure around the world, and that's what bounds it to energy. So now you have an energy-backed protocol that cannot be broken. And then now ask the question from my first question: if the free market has always been deflation, prices should fall, your life should get better, and this protocol can't be broken and is bounded to energy, then if you measure your life from this protocol, all prices would fall forever. From this protocol, 5 years ago, my house cost 300 Bitcoin. My house now, from this protocol, costs 11 Bitcoin. If you measure energy prices in the same unit, you see the same thing. You would see exactly as you would expect to see in a free market. What would it look like if you were over in this other market? It would look like you were converting this to a piece of paper to then measure the world. And the piece of paper was losing value. So it would look like Bitcoin was going up. And both would be true, depending where your belief of the system was. So that's why I go through, unless somebody has to understand the problem first, right? And then, and really understand the problem. And then their mind searches for a solution. And then, is Bitcoin that solution? And why I specifically said protocol is it means all of the other coins, all of the other nonsense is going to go to zero against Bitcoin.
Jeff Booth always begins by explaining the natural state of a free market, deflation. Both this reality and another fact hold equally true. A credit-based system cannot tolerate deflation. Holding these together creates a mental riddle, sparking cognitive dissonance as people wrestle with irreconcilable truths. Listeners, Booth notes, often replay the idea multiple times to reconcile how the current credit system blocks genuine free markets. Without grasping this core problem, he argues, Bitcoin appears just another coin. People must realize they have never experienced true freedom. Controllers have always pulled the strings, and raging at them only grants more power. Jeff Booth then poses what anyone would expect from AI and robotics boosting global productivity in a free market. Prices plummeting, life simplifying effortlessly, even for those doing nothing. He challenges reflection. Is that reality or something else? This reveals the actual system at play. Instead of jumping to Bitcoin, Booth describes an open, decentralized, secure protocol bounded by energy. Booth stresses that users worldwide access the same reality via connection. Non-participants simply opt out. The internet crushed off-grid businesses, just as Bitcoin layers built the next infrastructure, with iPhone-like innovations atop it. Proof of work ties it to energy, Booth explains through a baker's analogy. A reliable marginal buyer snaps up end-of-day bread, prompting doubled, quadrupled, exponentially scaled production, more ovens, hires, and abundance. Bitcoin acts similarly, rewarding the lowest-cost energy worldwide, decentralizing infrastructure. As we conclude, if Bitcoin represents a true free market protocol bounded by energy, with prices deflating against it as expected, what would your life look like measuring success in Satoshis instead of fiat? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.